The Indian auto industry, it doesn't just run on engines and fuel. It actually runs on a surprisingly predictable calendar. Today, we're going to break down this powerful seasonal cycle that really drives auto stocks. Once you get this rhythm, the market's ups and downs start to make a whole lot more sense. It all starts with something you've probably noticed yourself, right? Suddenly, ads for cars and two-wheelers are just everywhere. On TV, on billboards, all over your social media. Well, that's no accident. It's a huge signal of the seasonal demand that powers this entire industry, and as you'll see, its stock prices. So let's fire up the engine. Before we can even look at the calendar, we have to check what's going on in the engine room. These are the core economic forces that are always, year-round, powering the industry. So think of this like the country's economic dashboard. When GDP growth is strong, people feel more confident, they have more disposable income, and they're more likely to make a big purchase, like a new car. But high inflation, that can hit the brakes because it just eats away at people's savings. The most direct lever here, though, has to be interest rates. That really determines how affordable that monthly loan payment is for millions and millions of buyers. And this slide just perfectly illustrates that seesaw effect. It's really simple. When the central bank cuts rates, those auto loans get cheaper, and sales tend to speed up. But when rates go up, so does the cost of borrowing, and a lot of potential buyers just decide to wait it out. It's a direct, powerful lever on demand. And, it's not just about the buyer's wallet. You have to think about the builders, too. The price of steel, whether or not they can get their hands on enough semiconductors, the cost of petrol, all these things squeeze a manufacturer's profit margins. And a weak rupee? Well, that can make all those imported parts way more expensive, which ends up hitting the final sticker price. So beyond the economy, there's another major player that can basically steer the entire industry in a new direction, sometimes with just the stroke of a pen. And that, of course, is the government. This slide here breaks down the government's main toolkit. A simple change in the GST rate can change a car's price overnight. Stricter emission norms can raise manufacturing costs, for sure, but then you have policies like EV incentives or a scrappage program, and those can act like powerful accelerators, creating brand new demand almost instantly. Okay, so with all those foundational factors in mind, we can now turn to the real heart of this explainer, the calendar. This is where we see that predictable pattern of demand pop up year after year. And here it is, the Indian auto year, all in one glance. It kicks off with a budget, then it runs through 2 different harvest seasons. It all kind of hinges on how good the monsoon is, and then it builds up to this blockbuster period of festivals and weddings. Each one of these events triggers its own unique wave of demand. Let's break down how it all works. All right, first up, let's head to rural India, because this is where the fate of the auto sector is so often tied directly to the land and to the weather. The connection here is really simple, but it's so powerful. A good monsoon leads to a good harvest, which puts more cash directly into the hands of farmers. And what is that income often spent on? Well, tractors to improve the farm, two-wheelers to get around, or maybe even the family's very first car. It's a direct economic chain reaction. Okay, so now we're going to shift gears from rural incomes to a nationwide surge in spending. And this is the big one. It's the combined power of the festive and the marriage seasons. From about October all the way through February, this wave of just positive sentiment sweeps the country. It's seen as an auspicious time to make big purchases. And the automakers, they know this, so they flood the market with new models and big splashy discounts. And on top of all that, a new car or a new motorcycle is a really common and significant purchase during wedding season. And the numbers, they absolutely prove it. This period, especially that October to December quarter, consistently sees the highest sales figures of the entire year. For auto companies, a strong festive season can literally make or break their whole financial year. Finally, as the year turns, all eyes shift to a single day in February that can really set the tone for the entire year ahead. And that is, of course, the union budget. So the budget has this kind of 2-part impact. First, you get what's called the pre-budget rally. This is where investors start buying up auto stocks hoping for favorable policies, like tax cuts. Then comes the announcement itself. If those policies actually happen, it can ignite a whole new wave of growth in the sector. So, we've got the core factors, we've got the annual calendar. But the road ahead has some new twists and turns. These disruptive trends are starting to change the rules of this traditional game. This chart tells the story so clearly. Yeah, traditional petrol and diesel engines still have the biggest piece of the pie, but just look at the growth in the alternatives. CNG is becoming a really popular, cost-effective choice. And the real story, well, it's the incredible acceleration of electric vehicles. Consumer preference is shifting, and it's shifting fast. And as the analysis points out, this isn't just a fad, it's a fundamental trend. The companies that are investing heavily in EV and other green technologies, well, they're the ones attracting some serious investor interest, and they're positioning themselves for the future of the whole industry. And finally, it is always wise to watch where the big money is going. When these huge institutional investors, both from overseas and from within India, pour billions into the auto sector, it's a massive vote of confidence that can lift stock prices across the board. But on the flip side, when they decide to pull out, it can trigger some really sharp corrections. Okay, phew, we've covered a lot of ground here, from microeconomics to monsoons. So let's try to distill all of this down into a simple, actionable framework. It really all comes down to this four-step checklist. First, always check the overall economic health. Second, keep an eye out for new government policies. Third, know where we are in that seasonal calendar. And fourth, track who's leading the pack in new tech like EVs. This is basically your mental model for understanding the entire sector. And that brings us to our final thought. We've seen just how powerful these cycles of harvests and festivals really are. But as the very nature of the vehicle changes, from a combustion engine to an electric motor, you have to wonder, will these deep-rooted, traditional patterns of buying continue to dictate the future? Or is a completely new cycle about to emerge? It's definitely something to think about.